We built this last week. It's a very simplistic system. So we're simply going to download this and we're going to jump onto MetaTrader 5 and run this test on a pattern using the monkey test. Hello everyone and welcome back to Statira Trading. Today we're going to continue on from last week and things are going to get a bit more interesting. If you reflect, we built a smash day pattern. Now this was developed by Larry Williams all these years ago, but we found this on oxfordstrat.com. So now we're going to run some simulations testing this pattern to see if it's worthwhile to continue on further down the testing. So without too much of an introduction, let's get into the next part. So we have completed stage 1, research and entry modeling. Let's move on to stage 2, testing phase. So stage 2, the testing phase. This is a very important stage as we first want to see if this pattern has at least a 50% strike rate when we have a risk to reward ratio of roughly 1-to-1. This process can sometimes be referred to as the monkey test. And the reason we want to run the monkey test is we want to see if the odds are in our favor and we have an edge based on a 1-to-1 system, as we want to optimize this strategy down the line with different management styles, different risk to reward profiles, and we want to turn the strategy into something we want to use ourselves. So let's have a look at what the pattern looked like. So as we can see here on FX Dreamer, we built this last week. It's a very simplistic system. So we're simply going to download this and we're going to jump onto MetaTrader 5 and run this test on a pattern using the monkey test. So I've downloaded the FX Dreamer file and pulled it up into MetaTrader 5, which is where we are going to test this system. So what I'm going to be using is the strategy tester, which is part of MetaTrader 5, and we have our own tick data, so then we're getting accurate results. So let's go ahead and select the expert. So the expert is the YouTube smash pattern, which is what we're testing, and we are going to test it from 2015 to 2020. From this, we'll get a rough idea whether the system has over a 50% strike rate and if the edge is in our favor. So I'm going to go ahead and press start and we'll see what the result is. So if I go to the graph function, as soon as this starts, you will start to see winners and losses. So we'll just let this continue and then I will come back once we have conducted the backtest. Okay, so that is the backtest conducted. And what we can see here is, yeah, it's a pretty choppy equity graph. But if we go to the backtest results, we'll see if we achieve what we went out to achieve. So over that period, it took 378 trades and profitable trades was 50.79%. So on a 1-to-1 basis, yeah, there is a slight edge here. So what our next steps will be is we need to figure out what is the best stop loss, what is the best risk to rewards ratio. And how we go about that is let's look at different types of management styles. Also, from this, we can have a look at the graph and like, okay, so between the end of 2015 to the end of 2016, yeah, we were in a pretty downwards period. So was there anything that was happening by visually looking at the charts during that period that we can use as a filter? These are all things that we need to consider when conducting a backtest. So we'll zoom out here and we'll go to the end of 2015, which is roughly here, to the end of 2016. And what can we see? If we zoom out further, end of 2015 is here. So, we can see we heavily trended to the upside, then heavily trended to the downside. But if we look from the start of 2015 to the end of 2015, we can see that, it was very choppy in here, which is why we got lots of wins. So what can be said is this strategy works very well in ranging conditions from what I can see so far, but can't put a conclusion to that. So next, as we said, we need to think about what filters can we apply and what management can we apply. So let's jump back to the slideshow and we'll go through different scenarios. So now we know there is a slight edge. We now need to think of ideas to optimize this strategy. Now, I'll just mention one before we go into next week's video and really optimize the strategy. But one very obvious one thing to me is the stop loss. The stop loss is a static 50 pip stop, and we know that conditions can change in the market. So adding a ATR stop loss that, adapts to volatility, it could be good to use for the strategy, because if we reflect back to when COVID started, you could see how volatile markets were. And if you're using a small static stop, then you're going to be wiped out very, very quickly because price movements were so fast back then. But if you go and apply the ATR stop loss or the ATR indicator, to the chart, you'll see that that changes and stays relevant to the current markets. Now, if you don't want to go through all this and go through the whole process of trying to find a strategy and optimize it and test it, then we have a solution. We've done all the hard work for you, and we created our own algorithm called Sequenti that you can release yourself. It's a low risk with a high reward strategy that has consistent returns year on year and has beat the S&P over the last 15 years. Now, if you are interested in this opportunity, then in the description below, we have an EA assessment tool. It will give you a score and it will tell you if you're the right fit or not. So if you're interested, click the link down below. Okay, so now we know there is an edge in this entry model. We are going to optimize this strategy on next week's episode. Now, before we get to that, if you have any ideas you want us to try ourselves on this strategy for you, then please comment below and we will incorporate it into next week's episode. Now, the next stage of the process is optimizing. And this is probably one of the hardest parts when building a strategy, because we know there's an edge, slight edge in our favor, but we don't know how good an edge we're going to get. And one thing that people commonly do is they try and get the best result by changing lots of different things, which is known as curve fitting. Now, this is something that people get trapped in quite a lot and will normally lead to failure, because even if it gives a good result, it's hardly unlikely that that will keep working in the future because you've curve fitted it to the market conditions, and we know market conditions change. So from our point of view, we just want to keep it simple and effective. And if we don't get a good result, we don't get disheartened and we move on to the next edge, because we will find one. So that brings us to the end of this episode. Now, it was short, but we don't want to flood you with information, as we want to break each part down, as rushing the process is never a good thing to do. One thing I do have to add is this process is very simple, but finding strategies that give a great edge are few and far between. So you need to have in the back of your mind when creating ideas that not every one of them is going to be a winner, because if they were, everyone in this game would succeed. Now, if you've enjoyed this episode, please give the video a like, and if you want to see more, subscribe to the channel and hit the notification bell so then you get notified when we next upload. Until then, I hope you have a great day, and we'll see you in the next episode.